Premium investors, it is Jess here, and it is time for a Fibonacci placement tips update video. This is very long overdue. There are brand new tips, and there's also more frequently asked questions that I like to go over. Very quickly, I want to mention if you are not a member of or have taken the triple commenting system or power course, highly recommend that course. If you haven't taken that course, this video is not going to make any sense at all. That course is what took me from not knowing anything about investing at all to confidently managing my own portfolio. It dives very deep into Fibonacci. In addition, it reviews a bunch of different indicators that you can use as investors. While we're all different in what we prefer, so you can learn a bunch of different indicators and then choose ones that work best for you. So highly recommend that course. If you have not taken that, I will drop a link to a free masterclass that explains what that course is if you are not familiar with that. So I'm very excited. You all know I get overly excited about all things technical analysis. So what I'm going to do is I'm going to go through a couple slides and then we're going to go right to the charts and I'm going to demonstrate this. One of my passions is explaining number one, frequently asked questions, because if a bunch of investors have that same question, then answering those in this video will hopefully help, especially if you're new to Fibonacci in general. And in addition, I like to go over some tips that I personally have learned along the way. So let's get into this here now. Number one, super duper quick, biggest question I get is what the heck is Fibonacci? It's math. Okay, so how we get this sequence is by adding the last two numbers of this mathematical sequence to the next one. So we have 1 plus 1 is 2. Now add those last two. 1 plus 2 is 3. Add those last two. 2 plus 3 is 5. Add those. 3 plus 5 is 8. Okay, so it's creating a pattern, and we find this pattern in nature, by the way. Flowers, seashells, the galaxy. To give you a visual, if you picture a sunflower, the seeds normally follow that Fibonacci sequence. So in trading and investing, we take the same ratio and we apply it to price charts, and it helps us to anticipate where the price might pause, bounce, or reverse, because in investing, that is one of our top priorities. We want to know where is the price going, and Fibonacci helps us determine this and create a strategy of where we think the price could go. Now, the golden ratio, again, this is math, and I want to touch on this because the golden zone, which we're going to get into, is very important with Fibonacci, and we get the golden zone from the golden ratio number, which is 1.618. Now, as you go down, well, up in value, so the higher the numbers, the closer it gets to this golden ratio number. So as we see here, 21 divided by, oh, and I forgot to say, so how you get it is you divide one number in the sequence by the number before it. And that's how the sequence is formed. So the higher the number, the closer you get to that golden ratio number. And you can think of this ratio like nature's growth formula. So the fascinating thing is that this same sequence shows up in the markets as well. So price often moves in waves and retracements that reflect this ratio. And investors, you've used Fibonacci all the time, so it's almost like a self-fulfilling prophecy as well. If a bunch of investors are looking at this Fibonacci tool, then they can place trades based off of the tool, and then it sort of self-fulfills these strong levels, specifically the golden ratio, which we are going to get into. Now, biggest question and gray area and cause for stress is, where do we place our Fibonacci? So textbook in general, if you're doing the textbook Fibonacci, you're going to place it on the most recent confirmed trend. If you're not familiar with how to identify a trend or confirm it, I will quickly go over that. But here's one of the most important things to remember is when you're placing your fib, you don't always have to pick the exact most recent trend or move, because you want to keep in mind, number one, where is current price action? And is a recent trend valid? And I'm going to demonstrate this on the charts, as well as the larger the trend, the more that's reflecting market behavior. So if you have like a very small recent downtrend, but a very large recent uptrend, then most likely that larger uptrend is going to give you more of an exact value when it comes to Fibonacci, because it's stronger. So it's going to give you more of an indication of where that price could go. So you don't have to always pick the most recent trend. It's just think about what is the most relevant or valid trend. And I am going to demonstrate this if this isn't making sense. Oh, I already did this, but like, why? I will go over this though. Why? Why are we picking the most recent trend? Because it's the point of Fibonacci. So we're seeing how price behaves once a trend has ended or completed, especially around that golden zone. So say a stock goes on an uptrend and then it starts reversing. At that point, we're going to put Fibonacci on that uptrend and then see what happens. Because what is our goal? Our goal is to try and figure out where the price is going to go. And a lot of times the price will pause, or if it blows past that golden zone, it could reverse on a totally different trend. So our goal is to figure out what is the price going to do. So that's why we're picking a recent trend, because older trends already did their thing, right? Like if it's an old uptrend and then it turned to a downtrend, we don't care. I mean, historically, we want to look at how a stock is behaving in general. But when we're talking about current price action and where the price could go, we want to place our Fibonacci on a recent trend. Very, very quickly, if you are not familiar with how to identify, number one, an uptrend, a downtrend, and then when they have ended, there's also sideways trend as well. That's just like the price is not picking a general direction. So an uptrend is basically a set of higher highs and higher lows. So this high is higher than this high, this high, this high, this high, this high. This low is higher than this low, this low, this low. When a uptrend is invalidated is when the price breaks below the last higher low. I like to call these steps. So once the price falls past that last step or that last pullback in the uptrend, that uptrend is done. It's invalidated. On the reverse, a downtrend. What's a downtrend? It's lower highs and lower lows. This low is lower. This high is lower than this high. This high is lower than this high. This low is lower than this low, right? Everything's going down. Now, I like to call these handrails the pullbacks, and because when you hear pullback, if it's a downtrend, a pullback is actually going up. Just a little tip. If the trend is going up, a pullback is going down, which makes more sense. But on a downtrend, a pullback is going up. So the last pullback, I like to call these handrails. And when the price grabs onto that handrail and blows past it, then that downtrend has ended. So in this case, we do see that the downtrend has ended because the price blew past this last handrail or last lower high. Here's the finale-ish. I think I have one more slide. The golden zone, okay? It's based on that golden ratio that we talked about in the beginning, and it's an important zone where the price, I like to say the price likes to just make a decision. A lot of times it will decide to then pull back and continue on that previous trend. But if you see, and in this picture here, I highlighted the golden zone in a color. So it's the zone between the 61.8 to the 38.2 level. So this is the golden zone, and price loves to just make decisions in this zone. A lot of times it will pull back. So in the case of an uptrend, this is an example here. We see this uptrend, the price is pulling back. A common level for a pullback to happen is at the 38.2. A deeper pullback would be 50%. 50% is a very common area for price action to happen. And as these levels go lower, if the price is blowing past this golden zone, there's a high chance that price action can reverse and this uptrend can now totally reverse to a downtrend. And once the price breaks below this 100%, it has fully retraced. So we see an uptrend has fully retraced to a full downtrend, and then most likely we could see the price continue to fall because it has fallen past the golden zone and completely retraced. So this zone is just an area to keep an eye on. The stock loves to make decisions there. It either pulls back and continues on the trend it was on, or if it's blowing past these levels, then it can reverse to a different trend altogether. Now, this is how we can use it. So if we're looking at the kind of the golden zone and we see pullbacks, those could be opportunities to buy at lower prices. Or if you're kind of short-term trading, you can use this as momentum as well. So if it pulls back, say, to the 50% and we see price rising, then you can do a momentum trade and kind of short-term trade, maybe capture 20% profit, something like that. So you can use these levels as a way to integrate it into your strategy, whether you're a value investor or you're a swing trader. And this is just buying at lower prices or trading with the trend. Pro tips. So, and I mentioned this, use a trend and keep in mind your current price action, meaning where is the stock trading currently? What price is it trading at currently? Because if you have a price maybe down here and the most recent trend, the most recent trend would be a downtrend, but if it's so low, a lot of times we want to use a trend and then determine what it could do after that trend. But if it blows past the last trend, then it's not useful. So keep in mind, where is that current price action at and what trend is relevant or valid for Fibonacci. You can use past trends for Fibonacci in determining, as I mentioned, key psychological levels or where the stock has traded, but keep in mind, this is not using Fibonacci how it is designed to be used. So you can use past trends. Personally, what I do is if the Fibonacci is not relevant, then I'll look at key psychological levels for maybe buy limit orders, or I'm going to get into, you can duplicate the fib if it's dropped so low that there's no trends to even look at. Treat your Fibonacci levels as zones. So these are not exact points. Again, nothing is perfect in nature, and it's not going to be perfect on the chart as well. The stock isn't going to perfectly bounce off that 50% level every time. Maybe it'll drop a little bit past, maybe it'll almost make it, but these are just zones, so keep that in mind. Primarily textbook, you want to draw your Fibonacci from wick to wick because that's where actual price action happened. So your Fibonacci is going to be more accurate. Now, sometimes we do want to adjust this if maybe it's not hitting key psychological levels, that's absolutely fine. But overall, try to go wick to wick because it's going to be more accurate with your Fibonacci reading. And duplicate fib, very common question I get. If the price has gone to an all-time high or an all-time low and previous trends are just not relevant, when you're doing this, I'm going to demonstrate how to do this. When you're doing this, you're thinking about what is your strategy. If you're long term, maybe you want to duplicate a recent uptrend and then put it on top and see Because if you're long term and you think they're going to grow at the same trajectory or rate, then you can kind of project what could happen in the future. For trading on an all-time low, if it's on a downtrend, normally I take a smaller part of that downtrend and then duplicate it, because if the stock continues in that same momentum, then it can give you ideas of lower prices. So this is the way that we use the duplicate fib in cases where the price is just basically irrelevant to the current trends on the chart. And last but not least, if the fib levels don't match price action or doesn't respect key levels, don't use it. As I mentioned, if you're a Power Course Triple Compounding system member, you are going to have a bunch of different indicators at your fingertips, and you can use different tools instead of the Fibonacci, so don't force it. Sometimes we just don't use it, and that's okay. Let's do it, y'all. All right, so we're going to demonstrate this on the chart. I'm also going to really quickly go over settings, which is super fun. So what are we thinking about here with Fibonacci? Number one, super important, the trend. So if you're brand new, this is not going to be obvious, but if you've been reviewing charts a lot, trends are for the most part easy to identify. This is Microsoft here. We have an uptrend turned into a small horizontal sideways trading. Then we have another uptrend, sideways, downtrend, uptrend. Now I've been doing this a while, so I can see that with my eye. A really good tip, if you're not used to identifying trends, quickly switch it up here on your settings. You're going to click on this candle here and switch it to a line. See how that's a lot more obvious. Uptrend, sideways, up, sideways, down, up. Now, with Fibonacci, what are we focusing on? We're focusing on the most recent trend. Why? Because we want to watch what the price is going to do after that trend has completed. Now, in the case of Microsoft, we have this uptrend, and now what are we going to do? We're going to monitor it. So we're going to place this Fibonacci on this uptrend. Now, as we see here, the 23.6 level is serving as support right now. If we see that price go past 23 level, then this is the level to watch. Will the price pause or maybe pull back? So maybe it'll pull back, hit this 38%, and then continue on the uptrend. We don't know. It could do some sideways trading as well, because when I'm looking at Microsoft historically, in the recent term, we had some sideways trading here in 2024. So we could see some, and now I don't have my other indicators, so this isn't a full analysis, but keep in mind historical trading and then your other indicators in creating your overall strategy. And then Fibonacci is a supplemental tool. Now, the settings, we're going to do this very quickly. I do have a TradingView supplemental video to set up your whole chart. So this is a very great, one of my favorite elements to TradingView is this little sandwich icon, and you can tell what you're clicking on. So I know I'm clicking on the fib because it's highlighted. So you're going to right click on this purple dotted line, choose settings. And now this is how you're going to adjust your settings. Number one, make sure you only have 0, 382, 618, 1 on the left, checked. On the right, you have 236, 50%, and 786. Everything else is unchecked. Next, you can change if you would like, again, this is preference, at the levels, and you're under the style tab, by the way. Levels, you're going to choose percents. It's going to be automatically set to values. I personally like percents because that's how I refer to them, the 50%, 382%. So I prefer percents. You can also shift these percents to the right. So it's going to automatically set to the left. So see how it's the left on my chart, switch it to the right. Because if you're using a recent trend, then these values aren't on top of your chart. So it's just easier to see. And then I would recommend this really for anyone, is setting these values then to the middle of the line. It's normally set to the top, and I feel like this is confusing. In my opinion, I like it on the line. Maybe not for everyone. I like the Fibonacci value, to be in line with the Fibonacci line. So once you have set up your settings, oh, I forgot. If you want to color your golden zone a color and then leave the rest kind of like a neutral color, you're just going to click on the golden zone, which is the 382, 618, and 50%, and just choose your color. That's it. And you don't have to do that. That is preference. I like to do that because you want to hone in on that zone. So then you're looking to see, okay, how is the price reacting in that zone? Once you have created your settings, you're going to click on template, save as, save it whatever you'd like, press save, and then don't forget to press OK. Because if you don't press OK, it's not going to save. Once it is saved, every time you log into your trading view, it is going to be as you have customized it, unless you change it. So you don't have to worry about always having to change that. It is going to automatically come up on your chart. So as a review, when placing Fibonacci, start wick to wick. If possible, that's going to capture current price action. You're going to choose a recent confirmed trend, but I have an example where it's kind of confusing in gray. So I'm going to end with that. Focus on the golden zone. Keep in mind that when typically after a trend, and also keep in mind that it's reversed for a downtrend. So still, when the stock is going down, it's going to pull back to potentially that golden zone and then continue on a downtrend. Or if it blows past that golden zone, it could reverse to an uptrend. So it's just reversed for a downtrend. Now this is an example of an uptrend. When it pulls back, this area could be potential where the stock could bounce. Or as I mentioned, keep an eye especially on the 61.8 level, or in reverse on a downtrend, it would be the 23.6. And if it blows past that level, we could see a reversal. And then once it passes 100, it's full retracement. Now here's the gray area. Tesla, I can always rely on Tesla to be messy, because the messier the chart, the potentially confusing it can be. So if we're looking at Tesla, let's switch this to a line. We see this downtrend, this uptrend, sideways trend. What is the most recent trend? The sideways trend. What is the second to most recent trend? This uptrend. Which trend would I pick? This bigger trend, because this is telling me overall current market behavior. And let me switch it to candles here so I can place my fib. Why do I want to place it here? Because this downtrend was pretty strong. And now look at, interestingly, how the price is pausing at this 50%, which is common. So the price right now is trying to make a decision, and it is trading in this golden zone between the 50% and the 23 and the 38.2%. So what I'm watching here now, and what we can watch, is how is the price behaving? Will it pass this 50%? If so, then that could indicate that maybe we could see an uptrend and a potential reversal. If it holds, then this could continue on a downtrend. So this is how we're going to adjust our strategy based on, number one, market behavior. What has it been doing recently, and also current market price, picking a relevant trend. It doesn't have to be complicated, and I promise you, as you do this more and more, it's just going to be natural for you to just place your Fibonacci. I know if you're brand new, that sounds totally crazy, and if you would have told me this 2-3 years ago, I would be like, what? Like, there's no way, but I promise. Attend as many sessions as you can, and our step-by-step sessions are perfect for beginners. And I always say just attend as many as you can because we're always charting during sessions. You're going to pick up on terminology, technicals a lot quicker, and it will become just second nature. I promise. You gotta trust me. So this is all Fibonacci tips I have here. So if you have, after reviewing this video, any questions at all, we are here to support you. So the coaches are here. We will answer any questions. I hope this has possibly helped to mystify any kind of Fibonacci questions. I know there are gray areas, and I'd just like to go over common questions, gray areas. So please, please, if you have any questions, drop it below this post or this wherever you see this video. And any question you have, please post it in our school community group. You can just write something, and then you can post literally any question that pops in your brain. We are here for all of you to support you. So please let us know if you need anything at all. And as always, happy investing. Bye, premium investors.